To teach you a swing trading strategy that's not only used by experts and algorithms in the stock market, but also beginners should use it. So number one, you want to have an SPX chart, or you can use an SPY chart. But the most important thing is that whether it's SPX or SPY, you don't want the chart to include pre-market or after hours trading. You don't want that included in the price. You don't want that at all. So your chart generally is going to have a bunch of gaps like this because it's not including the after hours and pre-market trading. All right, number two has to be a 30-minute time frame. Number three, you need a 50 SMA. So again, SPX or SPY, no pre-market, no after hours trading, need a 50 SMA, has to be a 30-minute time frame, and your chart will be set up. If you're on Thinkorswim, it's in your settings tab. It's called regular trading hours. On some other platforms, it's called open, high, low, close. So it just depends. Now, the strategy is super, super simple. And if you follow this and don't give up on it, you will be correct on the direction or bias of the stock market pretty much every time. 90% of the time, you will have the correct direction. So let's get into it. Essentially how this works is when the price of the stock market goes below the 50 SMA, which the 50 SMA dictates uptrends or downtrends, whether those uptrends last for a long time or a short period of time, and whether those downtrends last for a long period of time or a short period of time, that's what it is. When the 50 SMA, as you can see here, goes below the SMA, you are neutral, the stock market, or you can try to play bearish, but you're not bullish. When the market gets back above the 50 SMA, you can go back to long. So like right here, market is still rejecting 50 SMA. Right here, the market starts to get above. At that point, you're no longer bearish the market, and you can look to be back bullish. As a result, the market goes up. And eventually you go back below the SMA. So that's where you'd stop being bullish the market and you go to neutral, or you could play bearish until the market does what? Goes back over the SMA, at which point you will stop being bearish and you will go back to bullish. So by following the simple 30-minute 50 SMA open, high, low, close strategy on the stock market, you simply use one SMA, you trust it, and you change from bullish to bearish as the market transitions above and below that moving average. This moving average is used by algorithms.